Good morning and welcome to today's webinar. I'm Craig Williams, President of IIAB Cal. Today we are excited to have Calvin Anderson of the Workers' Compensation Insurance Rating Bureau presenting what to expect at the final audit. Calvin is a Quality Assurance Director with more than 30 years of experience in the WCIRB's Classification and Test Audit Department. Calvin is responsible for administering California's test audit program and ensuring the quality of WCIRB classification inspections and test audits. And he frequently provides training for insurers and auditor associations throughout the state. Today's webinar is one in a series of joint IIAB Cal and WCIRB webinars as part of the IIAB Cal Professional Development Workers' Comp track. Today's webinar is being recorded. We have muted your phones to eliminate background noises. You can still ask questions throughout the webinar through the GoToMeeting toolbar. All questions will be addressed at the end. Calvin, take it away.
Well, thank you for that introduction, Craig. I'm excited to be here today presenting from our offices in beautiful downtown Oakland. So the slide you're seeing right now is an overview of the agenda and the items that we want to talk about concerning the premium audit process. You know, when is an audit required? What's the role of the premium auditor? What records are required? And you know, if there were a dispute, how would that be handled? At the end, there will be a question and answer session. So, you know, chances are we're going to go through the content and we will handle the questions on the end. So what we're going to do is we're going to start off to get things rolling with a poll question. So in a moment, we're going to launch the poll, and you can vote for the reasons you think that an insurer would perform a physical audit. And you can select as many of them as you think apply. So we're going to launch that right now. And so we'll give you a few minutes while you're deciding there which of these would be a reason to perform a physical audit. And at the conclusion of the poll, what we'll do is we'll flash up the results there so you can see how everybody voted, and then we will we'll talk about this for a moment. Okay, so I can see there's a large variance there in terms of what people voted for. And this was a little bit of a trick question in the sense that all of these answers are reasons that an insurer would perform a physical audit. So, the first one, of course, is the most important. They want to collect the correct premium based on the exposure incurred. There are times where, based on their review of all of the facts that have come in, maybe the claims that are being filed, the way the premiums are being reported, they may suspect fraud on a particular account, and they may initiate an audit for that reason. If the policy were over $13,000, it's required by law. And also, this is, item D. We're going to talk about that a little bit later. But if the policyholder were a licensed roofing contractor, it's required that a physical audit is conducted each year. So let's move on here. In the Uniform Statistical Reporting Plan, and that's the guide that we call it the manual, and it has the standard classification system. There are some definitions for audit. And basically what we're looking at here in the definition is it talks about the variance between a physical audit and a voluntary audit. So the physical audit being where we're examining the policyholder's books, records, and then the voluntary then is the signed payroll statement. Now within the USRP, there are these definitions as well, where it gets into a little bit more in-depth. But again, the concept is the same, that a physical audit can be when I show up at the employer's premises and I'm looking at all their books and records and I'm pouring through those, or the employer may elect to send me those copies electronically, and I might be able to do them, from a remote location. And in certain instances, that would be totally fine. If we had an employer that only had a single class code, let's say it was a, or a bank or something like that, it may be feasible for me to conduct it, totally remotely. And then a voluntary audit is that audit where the carrier is relying on a signed statement from the policyholder that says, here are my payrolls for this period of time. It may be a month, maybe a quarter, half a year, or a year, and they sign off saying, this is everything. So when is a physical audit required? So in 2015, we just changed the threshold from $10,000 to $13,000. So every policy that produces a final premium of $13,000 or more, it's required to have a physical audit. Additionally, a policy that develops less than $13,000 may require a physical audit also. So if that policy, if it's new business to you and it has the dual wage construction classifications on there, so high wage, low wage classifications, the requirement is that that audit or that policy be audited, as a piece of new business, and then that it is audited at least once every 3 years. Additionally, if a policy is for an employer that has a C-39 roofing license, the requirement there is that a physical audit be conducted at least once a year. And this is a stipulation that came into play here when the roofing industry, in an act of self-policing, approached the legislature and said, hey, we think there's some bad actors in our industry, and we think that having a physical audit every year would be helpful to the industry to make sure that we're getting the right payrolls and the losses, and that things are being accurately reported. And I think that that really has helped with this classification as well, because at the time that they were requesting this, the rate for roofing was sky high. And many of you, if you've been in the business for a long time, you realize there was a point in time where some of the rates that were being charged were $100 a premium for $100 a payroll. So that's a pretty healthy premium there. So let's talk about the life cycle of the policy. Being agents and brokers, I'm sure you're very familiar with this life cycle, in the sense that you have the period of time where you find a policyholder, you get the paperwork to the carrier, and then the carrier, of course, sends that information to the bureau, and then the policy runs its course. Now, after that policy is completed, the carrier is going to conduct a final audit, and they may use their staff, they may use an outside company to perform that work. And then what happens is, a little bit further down the road, is those payrolls and losses are then going to be submitted to the WCIRB on a USR, and that's a unit statistical report. And that's the information that we're going to use, where we're going to then test to see if an employer is eligible for a experience modification. And if they are, we're then going to publish the XMod. And so we're going to talk about how this audit process can ultimately affect the modification as well, because I think that's very important for your policyholders to know what's at play here and what's at stake with the final audit. So we know that a workers' compensation insurance policy is normally effective for 1 year. However, there are short-term policies, and there are instances where a policy can run for more than a year, up to a year and 16 days. The estimated premium is based on the annual payroll that's anticipated at the beginning of the year. So as you know, your policyholder is going to tell you, here's how much payroll I think I'm going to pay this year. And so from that, the insurance company can then figure out, well, what's the premium going to be for the year? And so because it's an estimate, we realize that, the employer may have overestimated the amount of payroll. And so in the end, they may get a return. They may have underestimated. I think it's very rare for somebody to hit the nail right on the head and get it down to the dollar, but usually we see one of those two options. You pay a little bit more, or you or you get a little bit of a refund. And so the final audit is ultimately, it's that process that calculates that final premium. And so when you obtain a workers' comp policy, the policy includes provisions in that contract that allow the insurance company, its representative, so that might be an outside audit company, or a rating authority such as the WCIRB, to examine and review the company records. And so I'm going to give you a slide here, and this is some language from our standard policy form. Now keep in mind that this is standard language and that some carriers may have something that reads a little bit differently, but I think the essence is the same. And basically it tells you the kind of records that they're going to be looking at, when they're going to, or how they're going to contact you, how long they can contact you, and that ultimately the information developed by the audit is going to be used to determine that final premium. In addition, it gives you a reminder that an insurance rate service organization, so again, think WCIRB, have the same rights that the insurer would have under that provision. And so the Bureau has a right to come out. And we're going to talk about the test audit program a little bit down the road, just so you kind of understand why the Bureau might be contacting your policyholder to actually perform an audit. So insurers are required to submit all their payroll and claims data for each policy to the WCIRB at the conclusion. And that information is submitted via a unit statistical report. And we talked about that during the policy life cycle there. And so why is that important? Well, it's important to the insurer because if they're late in submitting that information to the WCIRB, they can get fined for it. In addition, we know that late submission of the USR data, or that statistical data, affects the publishing of experience modifications and rate making. And our customer service folks, they're very aware of this because they get agents and brokers and people who are I guess the policyholder, who are calling up and saying, how come my experience mod hasn't been published? And ultimately, it may be because we haven't received the USR. So what is the role of the premium auditor in this process? Well, ultimately, the premium auditor is going to show up to determine the chargeable payroll exposure. So they're going to audit the records. And when they go out to the employer's premises, what they're going to do in this process is they're going to determine what is the correct classification for the business. They're going to ensure that individual employees are assigned to the correct classifications based on what's on the policy, or there may be additional classes they determine are applicable. And in that process, they're going to validate the payroll, and then they're going to validate any claims assignments. So if we had a worker that was injured, and in the in the insurer's records, that worker's payroll shows, or their claim classification shows a particular classification, they want to see that the payroll classification matches that. And so in the end, the insurer is going to use the audit to determine the correct amount of premium that's due for the policy period, and that'll then be the validation of the payroll and loss data that will be reported to the WCIRB for statistical purposes. So payroll and the basis of premium. We know that payrolls are the manner in which we determine the premiums for a workers' comp policy. So in order to conduct the audit, we need to have the payroll records for the policy term. Now, what does payroll include? Well, it can be a large number of things. So it can be wages, salaries, commissions, bonuses, vacation, holidays, sick pay, overtime payments, gifts, any substitutes of money earned during the policy period by employees and officers of that employer, okay? Other types of compensation, they may or may not be included in that, the remuneration or the payroll. So let's talk about those for a moment. So if we have an employer and they have tips, or they have severance pay that were paid to workers that are no longer in their employment, those items can be excluded from the premium computation. In addition, bonuses or an item that would be included. When we look at the housing that is provided, so if there's a market value to that, depending on the classification we're looking at or the type of business operated, that may or may not be included. And so what you have to do is refer back to the phraseology for the classification to determine whether or not that would be picked up at the time of the final audit. So when we look at the payroll records, again, a lot of times we're thinking of the books that are provided by ADP or something that might be in QuickBooks. Many employers want they provide summarized records to the auditor, and so it would be the amount that's assignable to each classification. And those records can be used by the auditor, but they may need to then reconcile those against the source document. So they may need the the ADP records so they can go back and they can see that a particular worker amount of money, and then they would validate against that. In addition, they may ask the employer for some employee records. If we saw that an employee changed job duties, they may say, well, hey, when did that change occur, and was that documented somewhere? In addition, when they're looking at the breakdowns by classification, they're going to want to list the employees for certain classifications and determine what are the job duties performed by those employees. And as a result, they may have to adjust workers from one classification to another because that worker was performing job duties that weren't consistent with the classification that they were placed in by the policyholder. And again, sometimes policyholders they just don't understand classification that well, and it's kind of a necessary evil of the audit to adjust a few people here or there. In addition, the auditor may ask for cash disbursement registers, 1099s and W-2s. And I know sometimes policyholders, they get a little anxious when you start asking for these kind of records, and they're kind of wondering, well, hey, what's that about? And basically the auditor is going to look through those records to determine, are there payments to casual labor? Are there subcontractors? Are there off-payroll payments to employees? Sometimes there's some payments there that that were paid through cash that otherwise would be considered payroll, and so that would be their purpose for looking for that particular information. In addition, they're going to look at some of the federal or state quarterly returns, and these are the 941s or the DE9s, and they're used as a payroll verification source. So what they're looking at is they're saying, here's the amount that was reported to the federal or state governments, here's the amount that's in the payroll journal, look, they match, we're good. If they see that there's a significant deviation one way or the other, they may have some additional questions for the policyholder. And so that's important to keep in mind as well. Now, there are other records that come into play depending on the industry that that the policyholder is in. So, for example, an employer that's a construction contractor, the auditor may need to look at job samples to confirm that the classification is correct. In addition, there are time card requirements for the dual wage classifications. If you're paying that, you get the low wage classification on there that requires the employer to pay a high wage. Well, then we have to validate the time cards were kept. For stores, things like invoices and gross receipts come into play to determine which classification applies when there's multiple types of products that are being sold. So now we've got another poll question here, and we're going to see how well you were paying attention here. And so what you can do with this question again is select all that you think apply. So let's go ahead and launch that poll. We're going to give you a few more seconds on this one, so get your answer in there. All right, we're going to close that up. Now I'm going to take a look and see what your answers were. All right, I can see that there were a number of you that had a sense of humor there that maximizing the premium charge due to the insurer. I know that from a policyholder's perspective, they look at that as probably being the reason that an insurer performs the audit. But actually, again, answers, B, C, and D, I think really sum up, the essence of what we're talking about here. That one, we want to classify the losses incurred during the policy period because, again, payroll and losses are the manner in which the, from a statistical standpoint, they're important. And then validating the payrolls by classification, most definitely a role of the premium auditor. And then also, again, so that a policyholder doesn't pay too much, there are those payments that can be excluded, and so that is really part of the the auditor's job as well. And there are certain instances where the onus is placed onto the employer to summarize their records in a certain way. Some auditors will, as a customer service, will help the employer to do that so that they can give them the credit. And then there's other auditors who will explain to the policyholder that, hey, if you do this next year, we can then give you credit for these particular items. And so just something to remember. So we're going to move on here to our next question, or actually our next part. Where we're going to talk about the WCIRB test audit program, and then we're also going to touch on consequences for not allowing a physical audit. So we talked about, first, the WCIRB, we're an independent organization. We're the insurance commissioner's designated statistical agent, but the insurance code allows the Bureau to perform test audits of carriers' audits. And so what we do is that we select a certain number of audits for the carriers that participate in the program, every month, and then we go out and we do an audit. And so there may be times where your policyholder says, hey, the Bureau is contacting me and they want to perform an audit. Have you ever heard of this organization? Is that cool? And again, this is something that we do that is authorized in the insurance code. And this is a way of quality checking the work performed by the insurer to make sure that their audit was correct, that the payrolls and losses are being reported in the right classifications. And so carriers that have poor performance in that area, they've got to come to the Bureau and they've got to tell us how they're going to fix that problem. And then if they've got good performance, what happens is we can exclude them from the program for a period of time. So now let's talk about the consequences of not cooperating with an audit. So if the employer fails to provide access to the insurer to perform the audit, there's some things that can happen. One of those is that the insurer could bill that policyholder for 3 times the estimate of the current annual premium. Plus, they could add the expenses to that that the insurer incurred trying to complete the audit. So that's definitely a big impact. One of the things that we saw on a prior slide is that the insurer has to follow regular and reasonable rules and procedures to notify the employer about the audit. So they're not going to contact them on Christmas Day and say, hey, I'm going to be out there this afternoon to do the audit. That they're going to make the appointment during regular business hours or during regular business hours for that particular purpose. So now, for experience-rated employers, if the WCIRB finds out, by way of this unit statistical report that the employer was not cooperative, what will happen is the WCIRB writes to that employer and lets them know that, hey, we understand that you didn't allow an audit, and that act could then impact your experience modification. And how does that affect the experience modification? Well, payrolls that aren't audited can't be included in the experience modification, so they'll be excluded. However, the claims for that policy will be included. And so just doing the math, you realize that if you have lower payrolls and higher losses, that the modification goes up. And so, again, an incentive for policyholders to cooperate and allow that, that audit. I'm going to bring this slide up. This was from the webinar that was conducted last, or at the last webinar that WCIRB conducted about experience rating. And I'm not going to dwell on this a whole lot, but the handouts are available for you to download. And there's a link here to www.wcirb.com webinars. And if you want to, you can pull up that presentation. There's a recording there. And it talks about these changes in 2017 about uncooperative employers and how that can impact your modification. So again, a very important piece of information to have. So if you didn't attend last webinar, this might be interesting. You might decide that, hey, I should check that out. Audit disputes. Well, from time to time we hear that there are policyholders that may disagree with the final audit. And so how do you proceed with that? What's the best course of action? So we recommend that policyholders that are dissatisfied with their audit, that they start by talking to their agent and broker, because we find that in many cases the agent or broker can explain to the policyholder what are the issues on the audit, and they may be able to resolve it right there, and it doesn't need to go any further. However, there are times where the agent or broker may take a look at that and say, yeah, I will beef on that. So every insurer is required to have in place a process to resolve audit disputes. That's mandatory. And in that policy, there should be then an endorsement that provides the contact names and addresses, the deadlines, the other relevant information you're going to need in order to dispute that. In addition, if you're not satisfied, there should be then additional information about the formal escalation process that would ultimately end in an appeal to the insurance commissioner. At the WCIRB, we've got an individual, her name is Robin McGuire, and she's our policyholder ombudsman, and she's a resource for California employers. She's somebody who can answer your questions. And again, on our slides for today, there is a link to some information from Robin that you might find useful if you find yourself in that kind of a dispute or situation there. So what we're going to do is we're going to lighten things up a little bit here, and we're going to summarize today's webinar. And we've got a top 10 list, reasons to cooperate with the auditor. So number one, the audit ensures that the policyholder is paid the correct amount for their workers' compensation insurance coverage. No more, no less. In addition, this is an opportunity for your policyholder to show off their organizational and record-keeping skills. And I know you've got some policyholders out there who are very organized and have impeccable records. And so this is their chance to shine. If a policyholder refuses, we talked about this, the insurance code permits the insurer to charge 3 times the estimated annual premium plus the incurred expenses. So that's definitely a reason to cooperate with the audit. Number 4, you can make an auditor smile. Have your records ready. When they arrive, offer them coffee, a comfortable chair. Tell them you like their tie. They'd love to hear that. Reason number 5, and again, this is for those employers that are experience rated, that unaudited payroll is not used in the experience modification, but claims for the policy period are included. And what that means is that the mod, or the pressure on the mod, is going to be upward. So it's important for them to cooperate so that they have an accurate experience modification. So reason number 6, in the end, it won't be that bad. Ultimately, nobody likes being audited, but you might as well get it over with because, we talked about, there are requirements and we know what happens if you don't cooperate. So make the best of the situation. Number 7, it's a chance to build a long-term relationship with your auditor since you may see them again next year. I've run across policyholders who they've had the same auditor year in, year out for a number of years, and show that they, share stories about their kids and their accomplishments and, where they're going to school and their grandkids and all that. So again, these are professionals. We talked about this about the last webinar. In 2017, debit experience modifications will exclude unaudited payrolls and they'll be issued, even if the employer or the policyholder no longer meets the eligibility threshold. And so this is a key change in 2017, and this is going to affect some employers. And, again, my sense is they're going to be unhappy, but it's all about getting the data right. Number 9, the auditor is a trained insurance professional and really enjoys spending hours sifting through payroll records. Auditors, they're an interesting sort, but, they want to get the job done right. And number 10, the audit may actually result in a refund. I'm going to emphasize that point, or sometimes there may be an additional premium due. So right now we're kind of at the end here. We do have some, I don't know if anybody has any questions, but we do have a few things that we could go over here real quick. So I've got one question that came in. I have a small business with a premium of less than $13,000, but the insurer wants to perform a physical audit. Can they do this? Well, yes. We talked about how, even policies under $13,000 may require a physical audit. And so the USRP also allows a carrier to go out and to audit those policies in sufficient intervals to ensure that the determination of the proper payrolls. So I've got another question here about stores. So we have a store that sells a variety of household merchandise, and now the auditor is asking for information about the sales percentages in different categories, such as floor coverings and furniture. And the policyholder thinks, hey, this is just a payroll audit. Why are they asking these kind of questions? So the answer to that is it's kind of simple, that that the auditor wants to ensure that the store has been assigned to the correct store classification. Now, if you look at the USRP, you'll find that there's a number of store classifications, and there's a provision that if a store sells more than one type of merchandise that or that sells more than one type of merchandise that is subject to a different classification, that you're going to determine the correct classification based on the highest rated category of merchandise sold, provided that that category exceeds 25% of the gross receipts. So what they're going to do is they're going to look at all the different types of merchandise sold, and they're going to say which of these exceed 25%, and they're going to say, okay, what's the classifications in play, and then they're going to find the one then that has the the highest rate there. Okay. All right, I'm going to look here to my my assistants. Do we have any other questions, Tim or Tara?
What is the percent on audits that result in refunds versus additional charges?
Okay, so we had a question. Somebody wanted to know, what is the percentage of audits that are done that end up in a refund versus an additional premium? And I think that is probably going to vary based on the insurer, and possibly the kind of the book of business that they write. I don't have a percentage on that. That would be something I'd have to probably dig into and ask some of my friends in the on the premium audit side what their experience is. I do know that there are a significant number of times where a refund is given on these policies, and I do know that there are additional premiums as well. So if I had to guess, I'm gonna say it's maybe 50-50. So we're gonna go on to our next slide here. and I'm going to give a shout out to, my colleague and coworker, Lynn Yelverton. She's going to talk about the general approach to classifying a business. And what I'm going to do right now is I'm going to turn this back to Craig and allow him to then close out today's webinar. Thank you. You've been a great audience.
Thank you, Calvin. And I want to thank Calvin for spending his time with us and providing us with his insight. As he mentioned, there's one final workers' comp webinar scheduled for October 19th on the general approach to classifying a business, and you can register at the iiabcal.org website. In addition, Dave Belusi, Executive Vice President and Chief Actuary for WCIRB, will be a keynote speaker at EnsureFest 2016, November 2nd through 4th in Rancho Mirage, California. To register for EnsureFest, please visit ensurefest.org. That concludes today's webinar. Thank you for participating.